Hello viewers, welcome back. We are now looking at building blocks. As we discussed in the last video, we always think about models or financial models in a modular fashion. We think about financial models in a modular fashion. Essentially, the modular fashion is made up of what we call the building blocks. If you think about a financial model in its entirety, it can be a little bit challenging. But if you think through that, a financial model is really nothing but a series of building blocks. They are just series, individual building blocks. In other words, they are building blocks that have been stacked on each other. Just like the way you are seeing that. They are building blocks that have been connected to each other. So if you look at the financial model as the whole of it, you may find yourself confused that how am I be able to build this? But how it's built is basically looking at the different building blocks that have been stacked together vertically to form a financial model. So these building blocks, they have been assembled together, and then it makes it a little bit easier to think about how to actually tackle the process of building a financial model. So thinking in a modular fashion can also help from a learning perspective in terms of skill development. So these building blocks that you have here, they are the ones that come up together to form what we call a financial model. So we can just learn to build one block at a time. And once we get really proficient at these blocks, we are going to start assembling them to get, we assemble them together to make a world-class financial model, as you are looking at it from this perspective. So even at this stage, we want to start thinking about having a whole library of schedules because these are the schedules, they are the ones that we are going to engage in financial modeling, and they are the ones that we refer to as the building blocks. So So want to start thinking about a whole library of schedules, since those engaged in financial modeling would typically have portfolios of these schedules that facilitate their model construction, and we refer to these schedules as the building blocks. So the building blocks are the same as the different schedules that we stack together to form our financial models. So those that are going to be engaged, they will have a portfolio of the different schedules that may look at. And those building schedules, the schedules they are called building blocks. But we want to approach a collection of those schedules in a modular fashion. So these may include the building blocks, or the schedules may include the revenue schedule. They may include the cost schedule. They may include capital or the working capital schedule. They may include the tax schedules. So the income tax schedules. So those are some of the building blocks. So all these schedules, they are going to be used to compute their respective items, line items. For example, this revenue schedule is going to be used to compute the revenues. So this approach in other words, this allows us to approach financial modeling in a modular fashion that is made up of a collection of different schedules. More importantly, once the schedule has been built and properly received for integrity, it can be stored for future use, which will save us enormous time, especially when we need to review some of them. Because you can save the schedule, let's say revenue schedule, you save it somewhere. When you're projecting another revenue schedule in the other coming years, you will just use that same information and add just the drivers, the model drivers. So it is pretty easy to start imagining how we may store these schedules. So we may need to look at ways how we can be able to store our schedules, so that by the time we need to use them, we don't actually spend more time on them. So one of the idea, because we are going to be having a different worksheet, we may be having a worksheet for, let's say, revenue, and we'll have a worksheet maybe for cost, a worksheet maybe for working capital. So you find that these worksheets are going to be a bit many in numbers. So one way to store them, you can actually have one Excel file or one workbook, and we'll make sure that all these files are in one workbook. So we could have one Excel file or workbook, and it is the one that we use to store all these different schedules that we have. Then we take this Excel file, maybe we store it to our hard drive or any drive. It may be on a CD drive, memory card, it may be on USB, it may be anything that, it may be a flash disk, it should be anything that you've used to actually store your file, because that file is going to be used in the future. And the other alternative is that you may have one worksheet and you make sure that all these schedules are stacked on each other. We stack the different schedules on each other, and we have only one worksheet but comprising of all those different items, and these are going to be stacked vertically on top of each other. So at this point, we want to just start thinking in a modular fashion and start imagining how we might save the schedules so that we can access them later and speed up our model builds. For now, we are going to turn on our attention over to the inputs. We are going to turn ourselves on the inputs, and we need to look through these inputs and understand which one are the most important inputs. We usually refer to these as model drivers. The reason we need to isolate them so that we can test what happens to them under a best and worst case scenarios. So let's jump into the next video and we get started on looking at the model drivers and why we basically try to separate or isolate them from other items. So let's meet in the next video. Thank you for watching. We'll see you there.